Hi, everybody. I'm excited to talk to you about some of my favorite income investments, and I figured what better way to start than with the first dividend stock I ever bought, Realty Income Corporation, ticker symbol O. So, Realty Income Corporation, if you're not familiar, they're a pretty big company. They're in the S&P 500. They're one of the 63 dividend aristocrats in the entire market. They are a real estate investment trust, or REIT for short. They own about 11,400 properties throughout the 50 states, Puerto Rico, Spain, and in the UK. Most of their properties are retail in nature, about 78% of the portfolio. The rest is primarily composed of industrial properties. Think warehouses and things like that. They also have smaller holdings in agricultural properties, and they're about to acquire a gaming property for the first time. They rent their properties to a little over 1,100 different tenants, and they primarily grow through acquisitions using a method called sale and leaseback. So, what they'll do is if a company owns its own real estate, they will sell the property to Realty Income and will pay rent to continue to occupy it. It's a win win. It frees up capital for the business and it gives Realty Income a nice stream of recurring revenue. So, in the past few years, Realty Income has really leaned into international expansion. They've grown a lot over the past few years. They spent over $6 billion last year alone on acquisitions, including a, a, about 1,000 properties, actually. They've spent over $1 billion every year since 2011. And that's one of the big ways they've driven returns for shareholders over time is through this acquisition model. They'll borrow money relatively cheaply, buy properties that pay a pretty nice return, and that spread is a nice way to boost profitability. Similar to you using a mortgage to buy a house, it's kind of gives you a little bit of leverage, but in a safe and controlled manner. So I mentioned that most of their properties are retail, and don't be too worried about that. Most of them are either recession resistant, resistant to e-commerce disruption, or both. Most fall into one or more of three categories. Discount retailers, Walmart is one of their major tenants. All three major dollar store brands, Dollar Tree, Dollar General, and Family Dollar, are in their portfolio as well. Or non discretionary retail, meaning retailers that sell things people need. Walgreens, FedEx, and Home Depot are among their top 20 tenants. Or service based retailers, which are naturally not vulnerable to e commerce. Quick and casual restaurants are a big focus. About 12% of their rent comes from restaurants. Um, they also have their tenants sign what are called net leases. These are leases that have long initial terms, think 10 years or more, and require the tenants to pretty much cover every variable expense of the property taxes, insurance, and most maintenance items. There's also annual lease increase or annual rent increases or escalators built right into the lease. And it's just creates a really predictable stream of income over time. So the proof is in the numbers. Realty Income has produced positive earnings growth in 25 of the 26 years it's been traded on the New York Stock Exchange. It has been able to grow its dividend at an annualized rate of more than 4% a year. It's increased its dividend for 99 consecutive quarters. It pays monthly dividends. It's paid over 620 monthly dividends. That's more than 50 years dating back to when it was still a non-listed REIT. And because real estate appreciates over time and Realty Income uses leverage to boost returns, it has generated a 15.1% compound return since listing on the New York Stock Exchange in 1994. To put that in perspective, a $10,000 investment at its 1994 listing would be worth over $500,000 today, assuming you reinvest all your dividends. Currently yields just over 4%. I started buying shares of Realty Income almost 10 years ago. It was the first income stock I ever bought. I reinvest all my dividends and I've added to my position every few months since originally buying it. It's one of my larger investments. It's outperformed the market over time with less volatility because of that consistent income model. It's been a less volatile stock than the S&P while returning market beating performance. It's a great addition to any portfolio, young or old. This is not just a stock for retirees, despite the popular misconception. It's one that you can buy early in your investing career, compound your returns by reinvesting dividends, and then once you're retired, transition to an income investment. So thanks for joining me. I will be back soon with more income investments to consider for you. This video is sponsored by the Motley Fool. Check out the link in the description to receive the top 10 best stocks to buy now or visit fool.com/Frankel.